Welcome back to Golden Rule Radio.
This is your weekly summation of the precious metals markets, where each week we're going to focus on what's happening not only with the precious metals, but the markets related to those metals. And today's April 19th. Robert, Tori, and Miles back in studio. As always, we're going to start with the precious metals, jumping right into gold. Still continued volatility in the last week since the last show. Miles, you were missing last week, so you go first.
Well, I didn't really need to be here last week because I told you guys what the gold would do the week before, and we did exactly that. So we broke above that 1263 number. We came all the way up to that between 1295, 1305. We just scraped the bottom of it, and now we're seeing a little bit of a pullback back down. I would love to see gold come back down to about that 1263 to 1265 mark. Back the previous entry point will be another entry point into the precious metals long term, and we should see that happen here within the next week or so.
So let me ask you, do we have to hit 1300? And we talked about that psychological resistance point. Was 1294, 1295 close enough?
No, double zeros are imaginary. 1295 was the actual fib level. People just like seeing double zeros, triple zeros, so it's all psychological.
It's where they put in trade stops and everything else, right? So, okay, that's kind of why we thought it was going to be psychological. But on a retracement there, we had mentioned 2 weeks ago that if we saw it break through the 1263, that would be a buy signal. We'd be entering a new range. So now that you're calling for 1265 support, I think that recommendation still is in effect. If we come back down now to that support level, Robert, buy signal?
Well, gold did jump on the geopolitical news of Syria and North Korea, but frankly, I don't think it jumped enough to say that it was really pushing from a geopolitical standpoint. It jumped, 2%? And if you see more chaos going on with North Korea, which I'm sure you will, I'm guessing that you will get a little bit more bounce, but pulling back into that 1265 range, we'll have to see where that support, if it holds there, or if it may come back down a little bit more, but it's going to be bullish with everything going on.
Was it enough of a move? It's amazing how quickly news becomes yesterday's news. We're going to need a new activity, a new saber rattling in order to give gold a little bit more wind in the sails. I'm with you. But the fact that we left silver and platinum and palladium behind, Miles, you want to touch on that?
No, the silver, platinum, and palladium pretty much have just sat sideways or actually a little bit down. And also, not surprisingly, especially looking at the economic output and economic expectations here in the U.S., some of the industrial metals have also been pushing down. Tori, I know you put some numbers together on like nickel, zinc, copper.
Well, and that is actually concerning from the standpoint we've been talking about the outlook on inflation being pretty bullish, and that's not just because of President Trump's election, but certainly since the election, the consensus was that he was going to do a lot to stimulate the economy, which was going to do a lot to stimulate inflation. I think you're seeing a weakening outlook on inflation now, and that is indicative of the transports, the Dow transports, the industrial metals that you're just talking about, Miles.
Well, and the gung-ho Fed is starting to change their tune a little bit. We expected, 3 more interest rate rises this week? We're now down to, or this year, excuse me, and how many are we going to have this year?
The wind shifted so quickly, and I'm a little confused by that. So mentioning this shift, it could shift right back to an inflationary expectation.
Absolutely.
The Fed funds futures, if I'm getting that correctly, have changed to only 1 more Fed rate hike this year and 3 in the next 3 years. But like I said, the wind shifted so quickly on this one for whatever reason. Tori mentioned this stimulus package that was going to be inflationary last week, and that was the trend then. Now we're talking about inflation not being a big deal. I'm not sure if I buy into that. You mentioned the industrial metals coming down a bit. I think that's just a slight readjustment, and this shift that's happened with the Fed expectation on the rate hikes, I think that probably has something to do with the stock market, because their policy has been directly correlated to the stock market. So as the stock market hasn't continued to break new highs, this expectation on the Fed rate hikes has changed, but I just don't believe it.
And in support of that, you got the Federal Reserve Bank of Kansas City President Esther George saying on Tuesday that the U.S. Central Bank needs to press forward with rate rises. Everything that you read is a little bit different. I hear maybe 2, maybe it's September and December, that it's going to be a little later in the year. But the inflationary concerns are still there. I'm with you, Robert, in that I think that the market is finding its place. It priced in all the inflationary concerns in the first quarter, and now it's waiting for the actual spending to begin.
As we mentioned in a few past shows, the Fed raising rates has correlated to the bottom of the gold price.
That's a really good point.
Take this. I just pulled my calculator up because it triggered a thought. And you have from the first Fed rate hike at 1,050 on gold in December 2015, it ran up and it pulled back. It's still, the higher low was 7% higher than the bottom. The next Fed rate hike, gold rose, it pulled back to the 1,200 level. That was also 7% higher. And then this last rate hike put in with gold at 1,200, gold ran from 1,200 to 1,295. Guess what 7% higher of 1,200 is? About 1,265, which is Miles's number. That's the breakout point. That's where we could pull back in this little bitty short-term decline. That's where support is.
U.S. dollar-wise, let's talk about where it is right now. And with Trump coming out last Thursday and saying he wants to see a weaker dollar, he's now starting to repeat himself. This is clearly something that's important to him.
Well, the weaker dollar argument is the competitive devaluation. It's so our products are cheaper overseas. I think that couples with some of the corporate tax breaks that he's looking at giving and trying to repatriate some of the money companies like Apple have been hiding overseas to avoid our U.S. Corporate taxes. So to push that dollar down lower, that's giving the assumption that we'll be selling more products overseas and therefore increasing all of our net worth. But the reality is when you push that dollar lower, you're also pushing the buying power of your dollars lower. And the general income for the average American, I don't think, tends to keep up percentage-wise with the loss in purchasing power.
That's right. And that weaker dollar tends to mean higher metals prices, and it can actually mean higher equities prices.
Yeah, the dollar is under 100 today, we should note. It's possible that we are seeing lower highs in the dollar. It pushed into the 102 level a few weeks ago, resisted, dropped back down below 100, pushed back up to 101. That could be the lower high that we're looking for to actually push below 100 again as we are today and continue lower.
I agree, Robert. I think that's exactly what we're witnessing.
And it also should be noted that the pound is rallying significantly today on Theresa May's snap vote, I think it's called.
Yeah, the next general election wasn't supposed to be held till 2020. Theresa May came out and said, if we're going to do this Brexit thing, I need some more people. So she went to Parliament this morning, Wednesday, to get permission to hold a general public election coming in June. That needed about I believe a 2/3 vote in Parliament. The opposition parties said they wouldn't oppose it, and they didn't. So June 8th this year, you're going to have a midterm election. Again, the next election in England wasn't supposed to take place till 2020, and they're going to go ahead and have one in 2017, 3 years early. Theresa May is expecting to pick up about 100 extra seats in Parliament. That should make both the transition out of the EU easier. It's going to postpone the next election till 2022, which will give them an extra couple years to work on some of the new trade deals that they're going to have to build.
So almost too much to talk about this week. We're going to wrap it up, and let's get into specific precious metals recommendations. And I'm going to just start with, look, nothing's changed from a gold-silver ratio standpoint. Still recommended to be acquiring ounces of silver.
So within gold, there are things that are an opportunity today, which are $20 gold pieces, old $20 gold Liberties and St. Gaudens. Those are selling at historic low premiums. So when you look at, do I want to buy regular bullion gold? Do I want to buy $20 gold pieces? Again, there's a time to buy something and there's a time not to buy something. So yes, you can go and buy just regular bullion. Call us, we'll sell it to you. That's fine. It's easy. Or if you want a dynamic portfolio, now's the time to be developing that.
Yeah, the opposite being a static, dead-end portfolio.
You have nowhere to go if you own Krugerrands, except playing the gold price if you're actually looking to try to profit, or you're just sitting there in a bullion product. With a dynamic portfolio, with something that actually fluctuates, you buy it at the right time, then you're able to sell it at a decent time. Doesn't even have to be the best time when you sell it. It just has to be a better time than when you bought it. And then you go into something that's more static.
For a much more in-depth conversation, you definitely want to check out this week's McAlvany Weekly Commentary with Dave McAlvany and Kevin Orrick. We'll put the link up in the show notes. Or, as always, give one of us a call here at ICA. We'll talk you through some of the strategies we employ to make sure that our clients' portfolios stay dynamic.
And before we leave those double eagles, they're called, those $20 gold pieces, look, there's more than just the premium. You really have to have an entire macro approach to your physical metals, and that may include confiscation concerns. A lot is changing. Call us and we'll talk about that as well. Tori, Robert, and Miles signing off this week of Golden Rule Radio. Please follow us on Twitter at ICA Gold, and you can subscribe by clicking on the subscribe button below this video, or again, give us a call.
Thanks for listening.
Have a great week.